With the industrialization and involvement of technology, digital currencies are gaining an upper hand over others. One such currency is cryptocurrency. Welcome to CryptoCryptid. Today we're going to be looking at cryptocurrency trading for beginners. And if you want to know more about cryptocurrency, make sure you follow our channel. Let's get into the video. Let's start with the basics. What is cryptocurrency? A cryptocurrency is a digital or virtual currency that is secured by cryptography, which makes it nearly impossible to counterfeit or double spend. They are generally not issued by any central authority, rendering them theoretically immune to government interference or manipulation. Cryptocurrencies make it easier to transfer funds directly between two parties, without the need for a trusted third party like a bank or a credit card company. Listed here are some of the reasons which could convince you why the cryptocurrency is better than the other traditional banking methods. Number 1. Protection from inflation. Many currencies' values have declined because of inflation. Almost every cryptocurrency, at the time of its launch, is released with a fixed amount. There are limited bitcoins, therefore as the demand increases, its value will increase, preventing inflation in the long run. Number 2. Self-governed and managed. Governance and maintenance of any currency is important for its development. The cryptocurrency transactions are stored by developers and miners on their hardware, and they get the transaction fee as a reward for doing so. Since the miners are getting paid for it, they keep transaction records accurate and up to date, keeping the integrity of cryptocurrency and the records decentralized. Number 3. It's secure and private. One major concern for cryptocurrency has been security and privacy. The blockchain ledgers are hard to decode. Therefore, cryptocurrencies are more secure as compared to electronic transactions. Cryptocurrencies use pseudonyms that are unconnected to any user, account, or stored data that could be linked to a profile, hence ensuring utmost privacy. Number 4. Currency exchanges can be done easily. Cryptocurrency can be bought using different currencies like the US dollar, European euro, British pound, Indian rupee, or Japanese yen. With the help of different cryptocurrency wallets and exchanges, one currency can be converted into the other through cryptocurrency trading across different wallets with minimal transaction fees. Number 5. Decentralized. An advantage of dealing with cryptocurrency is that they are mainly decentralized. A lot of cryptocurrencies are controlled by the developers using it and the people who have a significant amount of the coin, or by an organization to develop it before it's released into the market. The decentralization keeps the currency monopoly free and in check, so that no one organization can determine the flow and the value of the coin. And unlike fiat currencies, which are controlled by the government, decentralization will keep crypto stable and secure. Number 6. Cost-effective mode of transaction. Cryptocurrency is most famous for being used in overseas money transfer. With the help of cryptocurrency, the transaction fees paid by a user is reduced to a negligible or zero amount. This is done by eliminating the need for third parties like Visa or PayPal to verify a transaction. This removes the need to pay for any extra transaction fees. Number 7. A faster way to transfer funds. Transactions, be it international or domestic, in cryptocurrencies are lightning fast. This is because the verification requires very little time to process, as there are very few barriers to cross. The term trading is commonly used to refer to short-term trading, where traders actively enter and exit positions on relatively short time frames. When trading, you can trade dollars to crypto, for example US dollars to Bitcoin, or Litecoin to US dollars, or trade crypto to crypto, for example Bitcoin to Ethereum, or Ethereum to Litecoin. Cryptocurrency trading is riskier than stock trading, but it depends on what stocks or cryptocurrency you're trading and how you're trading it. Trading penny stocks or trading options can be equally risky as trading cryptocurrency. Before trading cryptocurrency, you should be aware that you risk losing your money to the market. If you really believe in the future of cryptocurrency, holding onto your crypto assets for the long term may be more beneficial than trying to time the markets. Both traders and investors seek to generate profits in the financial markets. Generally, investors seek to generate a return over a long period of time, years, or even decades. Since investors have a larger time prospect, the targeted returns for each investment tend to be larger as well. Traders, on the other hand, try to take advantage of the market volatility. They enter and exit positions more frequently and may seek smaller returns with each trade, since they're often entering multiple trades. One of the main advantages of the crypto market is that you don't need a lot of startup capital to get started. A beginner trader will only need $1,000 to purchase some digital money, transfer it to the exchange, and start venturing using the chosen strategy. Cryptocurrency trading is dangerous as it is an extremely volatile asset. High fluctuations in the value of digital money allow not only to rapidly lose capital, but also to offer an opportunity to increase it. When determining the starting amount, you must keep in mind that its loss should not affect your welfare in any way and should allow you to contribute in trades till you're able to work out the strategy. At the initial stage, the main task should be the formation of a trading strategy, which in the future will be able to protect when operating with significant amounts. If the initial trading experience is a success, then going forward you must analyze the average profitability that was achieved by working with a small deposit. The amount should be enough to buy cryptocurrency, but at the same time not so large as to be afraid of losing it, i.e. with minimal risk. The first thing to understand is that you don't have to jump right into traditional crypto exchange trading to get exposure to crypto. In fact, a beginner might prefer to use the Square Cash app. Square's Cash App is an excellent choice for newcomers. Cash App lets you buy, sell, send, receive, and store Bitcoin, just like Coinbase. Cash App doesn't offer all the other crypto choices as Coinbase, but it does provide a simple way to get exposure to Bitcoin without having much information about crypto wallets and exchanges. Furthermore, have a look at the 5 stages to cryptocurrency trading. Step 1. Make a cryptocurrency brokerage account. Assuming you don't already own cryptocurrency, you need to make an account with crypto brokerage. Some of the best crypto brokerages on the market are Coinbase, Gemini, and eToro. All 3 offer a simple user interface and a variety of altcoins to choose from. To make an account, personal identification information must be provided to crypto brokerage. Some basic details you need to provide when setting up your account include your social security number, address, date of birth, and email. Step 2. Fund your account. After you signed up with a crypto brokerage, you'll need to connect your bank account. Most crypto brokerages offer bank funding through debit cards and wire transfers. Wire transfer is typically the cheapest option offered to fund your account. It's free on Coinbase and Gemini. Step 3. Pick a crypto to invest in. Usually active cryptocurrency traders assign most of their capital to Bitcoin and Ethereum. These cryptos move more predictably than smaller altcoins, so trading with technical indicators can be easier. Many crypto traders allocate a portion of their capital to smaller altcoins. Although small mid-market cap cryptos are riskier than large market cap cryptos, they offer a higher upside potential. Many small altcoins have risen over 1,000% in a matter of months, making them attractive investments for risk-tolerant investors. Step 4. Choose a strategy. There are abundant trading indicators to choose from, and multiple factors are taken into consideration when buying and selling cryptocurrency. If you're new to investing, you may want to consider purchasing a cryptocurrency trading course. If you're an experienced trader, you may already have a strategy that you use to trade stocks, like the Elliott Wave theory, which focuses on the psychology behind the market sentiment, so it works well for speculative assets, like cryptocurrencies. Step 5. Store your cryptocurrency. If you're actively trading your cryptocurrency, you'll have to store your funds on the exchange to have access to them. If you're buying your cryptocurrency to hold for the mid to long term, then you should get a cryptocurrency wallet. Cryptocurrency wallets come as software wallets or hardware wallets. Hardware wallets offer the best security as they store your crypto on a physical device offline. If you're looking for a software wallet, there are several options available on iOS, Google Chrome, and Android that are free to use. Following are the types of risks you might encounter. Market risk, the potential losses you could experience if the asset loses value. Liquidity risk, the potential losses arising from liquid markets where you cannot easily find buyers for your assets. Operational risk, the possible losses that stem from operational failures. These may be due to human error, hardware-software failure, or deliberate fraudulent conduct by employees. Systemic risk, the potential losses caused by the failure of players in the industry you operate in, which impact all businesses in that sector, e.g. the collapse of the Lehman Brothers in 2008 had a massive effect on worldwide financial systems. Here are some must-knows before trading cryptocurrency. The cryptocurrency market is insanely volatile. You can make a fortune in a moment or lose it in the next. If you trade the top coins by market cap like Bitcoin and Ethereum, or GBTC, then chances of losing everything overnight are less. Not impossible, but less. Other cryptocurrencies are riskier, but can offer quick gains on a good day. Coins with lower market caps and volumes tend to offer a greater risk or reward. Cryptocurrency trading is a taxable event. Unless you understand all the tax implications of trading cryptocurrency carefully, you might fall into a malicious trap. Securing your accounts is really important. In crypto, if your account gets hacked, or if you lose access to your wallet, you lose everything you have in there. In many situations, there is no way to recover, so security is super important. For wallet protection, you must write or copy your seed or PIN onto a device kept offline. Best to have a backup and to have them both encrypted. In other words, if you understand order types, security, and what you're trading, you're ready to start trading cryptocurrency. If you found the video worth your while, then make sure that you like, comment, and subscribe to our channel. Stay tuned for further updates on crypto, and I'll see you in the upcoming video.